This week, after the U.S. election, the S&P 500 surged to a new all-time high, and the rally continued after the Fed reduced the interest rate by another 0.25%. And year-to-date, the S&P 500 has gained over 25%. And would you believe me if I say that we could see another new all-time high for the S&P 500? Well, don't take my word for it, but watch the video and I will tell you what the market is saying and how it is telling us to expect a new higher high. Welcome to another weekly S&P 500 analysis. Looking at this monthly chart of the S&P 500, you can see that the month of November started out very strong here. For the month to date, the S&P 500 gained just a little bit over 5%. And on this weekly chart, we see that the post-election really helped the S&P 500 move to a new high. And for the week, it gained 4.66%. And as you can see, the post-election day on Wednesday, it gapped up and put in a new all-time high. And for the following two sessions, it also gapped up. And on Friday, put in the third consecutive all-time high and closed with 3 consecutive all-time high for the week. And also the Dow Jones Industrial, after a little pause on Thursday, it also finished the week with a new all-time high. And for the week, the Dow Jones Industrial gained 4.61% or 1,936 points. The New York Stock Exchange Composite also finished the week with a new all-time closing high and also made a new all-time high. For the week, the New York Stock Exchange Composite was up 3.55% or 683 points. In the text-heavy NASDAQ 100, it finally caught up to the other major indexes after the election, and it put in a new all-time high on Wednesday, the day after the election. And as you can see, it's also finished the week with a new all-time high. And for the week, it gained 5.41% or 1,084 points for the NASDAQ 100 and 5.74% for the NASDAQ Composite, and that is 1,046 points. And here, looking at the chart of the indexes, you can see that the Dow Jones Industrial made a new all-time closing high on Friday. So did the New York Stock Exchange Composite. Now, the Dow Jones Transportation did make a new closing high on Wednesday, but it did not close with a new all-time high on Friday. And the NASDAQ 100 did make a new all-time high and close with a new all-time high. Likewise for the S&P 500 on Friday. Now the Russell 2000 still have not made a new all-time high yet, but it did make a new 52-week high. And looking at the 11th sector in the S&P 500, we noticed last week we saw the technology sector XLK, the discretionary XLY, and also the communication XLC made a new all-time high, along with the industrial, the XLI. Now, the retailer did not make a new all-time high, and neither did the energy sector. And the other sector that made a new all-time high last week was the financial, and we did not see an all-time high from the stable, the healthcare, utilities, and also the real estate sector. Look at this sentiment chart here. The VIX is sitting below 15 as of Friday's close. It's sitting at 14.94. And also the put-call ratio is way below this 0.75 area, and it is sitting at 0.64. So definitely based on the sentiment chart, the market participants are showing no fear and they are all risk on. And looking at this internal, the up-down volume ratio is not really that strong here on last week's rally, the post-election rally here. In matter of fact, on Friday, we saw the S&P 500 made a new all-time high, but the up-down volume ratio is actually negative, and that indicates there's a little bit more selling volume than buying volume, so that is not an encouraging sign. And also looking at the daily advanced decline, we're really not seeing that bond market participation during this post-election melt-up, or some people call it melt-up or rally here. So definitely it is a sign of caution. Now, the positive thing is there are more stock making new 52-week high than 52-week low, and it did expand it upward on this post-election rally here. So that is a good sign. And since we saw a lack of bond market participation or a strong bond market participation on the daily advance decline, we are noticing there is a slight negative divergence here for the AD line and the SP 500. So definitely this is a little bit of a concern in terms of near-term pullback. Likewise, in the Nasdaq market, we also noticed a negative up-down volume ratio on Friday, while the Nasdaq 100 put in a new all-time high. In addition to that, similarly to the New York Stock Exchange, the daily advance decline wasn't that bond market type of participation in this all-time high push here. Notice that we only had 389 more advancing issue than declining issue on the day that the Nasdaq put in a new all-time high. And similarly to the New York Stock Exchange, the Nasdaq market also showing more stock making new 52-week high than 52-week low, and they also expanded the number of stock making new 52-week high. So that is a good sign. Yeah, looking at the cumulative AD line in the Nasdaq market, we are noticing that there is continued this negative divergence. So it's nothing new here. We've been watching this long-term negative divergence for quite a while and waiting for that to get resolved. So it just add on to the caution from the New York Stock Exchange that we should kind of be prepared for some sort of near-term pullback. Let's take a look at the price action of the indexes, starting with the ES, the E-mini S&P 500. Look at this volume profile chart only. As you can see, right now it has gap away from this balance area. Remember, we were talking about this balance area last week, and we're saying that it will remain here until after the election. Then we probably will see a directional move, either move up away from this balance area or come down away from this balance area. So as it turned out from the post-election move, it came up and actually gapped away from this balance area. And right now it's one time framing up into a new all-time high. And here looking at the market profile for the ES, you can see that there's this gap down here and there are a lot of unfinished business. Even down here on the post-election day, we do have a little bit of a single print here. Now the last 2 days it was quite balanced. So for the coming week, either we continue to see this thing move up to find balance or find acceptance, or it could kind of chop around here and then establish some sort of balance here before it make another directional move. Then the third option is that it could come down and try to find balance inside of this area once again, and at the same time try to fill in this gap here and also finish or resolve some of these unfinished business. And looking at this candlestick chart for the ES on a daily basis, you can see, remember last week we talked about this area here and they're going to break above and put this upper range in play. And then you see that this is the monthly or the November upper range. You can see that the price have taken out the monthly range here. So definitely the post-election move is quite strong and have taken out the entire monthly range here. And for the coming week, you can see that the market is pricing in the upper range for the week is between 6,105 and 6,093.25. And for the lower range is between 5,953.75 and 5,920. So what we're going to be watching for in terms of the price action is to see would it be able to hold this monthly range here. Man, we probably get a little bit of a back test at this monthly range, then push up into this upper range for the weekly expected move. So that would be the upside scenario. Now, if we get a little bit of a consolidation, then we can see it come down to this lower range and possibly just kind of chop around here between this 59.50 and 59.20 area to establish some sort of balance. Or if it doesn't hold this weekly lower range and it decides to break down, then we probably will see it come back in to fill this gap and possibly try to expand this area here. So we're going to build this, balance area and expand it into a one huge balance area. So that would be the third scenario and that would be on the downside. And looking at the SPY, we see a similar type of price action. It took out the upper range for the weekly expected move and also took out the upper range of the monthly expected move. And for the coming week, the market is pricing in the upper range of between 606.80 and 605.50. And the lower range is between 590.90 and 588. So what we're going to be watching for the coming week is to see would it be able to hold above this monthly upper range and then push up to the upper weekly range. And that would be the upside move. Now, if it doesn't, hold this monthly range and decide to come back down, then once again, similar to the ES, we expect it to possibly maybe chop around here inside of this lower range and try to establish balance. Now, if it doesn't hold this lower range and it decides to dip back down, then we are looking for this gap to get filled and possibly just kind of chop around here to build this balance area to expand it out. And for the NQ, we see the NQ came up, and right now it's trying to come up to this 80% of this major move. Okay, so basically looking at this major move here, and next week we're going to see would it be able to come up to this 100% major move up here at the 21,765 if it continue to push up. Now, if it doesn't, push higher and decide to pull back, then we'll be looking for it to come down into this area here between 20,800 and 20,500 and possibly fill in this gap here. And looking at the QQQ, the ETF for the NASDAQ 100, see that the price came up to the monthly upper range here and also tagged the 80% of this symmetrical move here. Remember, we're basically looking at this symmetry move. So it came up to this 80% last week and, took out the upper range of the weekly expected move and move inside of the monthly range of the expected move. And for the coming week, the market is pricing in the upper range between 524 and 522 and the lower range between 506.30 and 503.50. So for the coming week, we're going to see what it could be able to continue to push up and get into the upper range. And that would basically tag the 100% of this symmetry move. Or would it come back down and test this lower range of the weekly expected move and possibly just kind of build up a little balance. Now, if it doesn't hold this lower range, then we expect it to come down into this gap fill and basically get into this balance area and try to find balance here. And that will come down, pushes it back down to this 489 area. Although the internal are not as robust as it should be for the massive post-election rally last week, but we did see multiple indexes make new all-time high, and we know the market does not top with multiple indexes at all-time high, and this tells us that we should expect another new all-time high from the market. So be sure to go and check out my newsletter at Substack for additional content. The link is listed below and also in the description. So help me promote this video by giving a like, and if you are new to this channel, click the subscribe to support this channel. Thank you for watching and good luck on your trading.